Welcome back to This Week in Finance. I'm so glad you are here. This is your weekly wrap, the show where we recap everything that moved markets this past week and tell you exactly what you need to be watching heading into next week. We are covering the period from Monday, April 27th through Friday, May 1st. And let me tell you, this was one of the wildest weeks of 2026. Record highs, a Federal Reserve in turmoil, oil exploding, Magnificent Seven earnings carnage, and a stunning Friday turnaround. We have a lot to get into, so settle in. Before we dive in, the standard but important reminder, everything you hear on this channel is for educational and informational purposes only. It is not financial advice. Investing carries real risk and you can lose money. Always do your own research and consult with a licensed financial professional before making any investment decisions. Now, let's get into it. Let's start with the headline number for the week. The S&P 500 closed Friday at 7,230.12, a brand new all-time record high. The Nasdaq Composite closed at 25,114.44, also a new record, and crossing the 25,000 level for the first time in history. The Dow Jones Industrial Average finished at 49,499, slightly down on the day, but still near record territory. April was officially the best month for stocks since 2020, with massive gains across the board. But here's the thing. The headline numbers do not tell the real story of this week. Underneath those record closes was absolute chaos. Let me walk you through it day by day, then break down what is actually happening in each sector. Monday opened with a bang. The S&P 500 and the Nasdaq both smashed brand new record highs right out of the gate, riding the momentum of strong tech earnings expectations. The S&P closed at 7,173, the Nasdaq at 24,887. Investors were riding high heading into the biggest earnings week of the year. Then Tuesday, the rally cracked. A Wall Street Journal bombshell dropped, claiming OpenAI was missing its own internal revenue and user growth targets. Their CFO reportedly worried the company might not be able to pay its massive computing contracts. That sent shockwaves through the entire AI infrastructure trade. Chip stocks got crushed. Nvidia, Oracle, AMD, and Taiwan Semi all dropped hard, with Oracle alone falling more than 5%. The Nasdaq lost nearly 1% on the session. Wednesday brought the main event of the week. The Federal Reserve held interest rates steady at 3.5 to 3.75%, exactly as expected. But here's the twist nobody saw coming. The vote was 8-4. That is the most divided Federal Open Market Committee vote since 1992, with 4 members publicly dissenting from the decision. This is a Fed in serious internal disagreement about the path forward, and that uncertainty is now something the market has to price in. Wednesday night, 4 of the Magnificent Seven reported earnings after the bell. The reactions were brutal, and they tell you everything about where Wall Street is right now. Alphabet, the parent of Google, exploded higher, eventually capping off its best month since 2004, the year of its IPO. Their cloud business grew 63% year over year, crushing the 47% estimate. Meta, on the other hand, crashed almost 9% on Thursday, its worst single-day drop since October. JP Morgan downgraded Meta from overweight to neutral, saying the company has a challenging path to making money on its massive artificial intelligence spending. Microsoft fell about 4%, hurt by aggressive capital expenditure guidance. Amazon was relatively quiet. Then, Thursday delivered another twist. Caterpillar reported earnings and the stock popped nearly 10%, boosting the Dow by almost 800 points. Caterpillar is viewed as a bellwether for the global economy, and the strong report offered a real glimmer of hope. The Dow surged 790 points on the day, one of its best sessions of the year. Friday, today, brought the surprise capper. Apple reported Thursday after the close, beating both earnings and revenue estimates. Their forward guidance was actually better than expected, even as iPhone revenue came in slightly light. Apple jumped more than 3% on Friday and helped push the S&P and Nasdaq to those fresh record closes. On top of that, oil prices fell sharply on Friday after Iran reportedly sent a response through Pakistani mediators on the latest U.S. peace draft. WTI crude dropped to around $103 per barrel, easing one of the major pressures on the market. Now, let's break it down by sector, because this is where you need to focus your attention as an investor. First, technology. The big takeaway is that Wall Street is now clearly separating winners from losers in the AI trade. Companies with real monetizable AI revenue, specifically Alphabet, Microsoft, and Amazon with their cloud businesses, are being rewarded. Companies still spending heavily on AI without a clear revenue path, namely Meta, are being punished. This is a major shift from 2025 when the entire AI sector rose together. Going forward, expect more divergence within tech. Apple is back in favor after its earnings beat. Nvidia had a mixed week, recovering some losses on Friday. Roblox got absolutely crushed today, down 17% after slashing its full-year guidance. Second, energy. This sector has been on a roller coaster. Brent crude touched $116 on Wednesday, the highest since June of 2022, on the back of the Iran blockade. Then it tumbled today on peace progress, finishing the week around $110. Energy stocks gave back some gains on Friday, but had a strong overall week. ExxonMobil and Chevron both reported solid first-quarter earnings that beat profit expectations. The energy trade now hinges entirely on what happens with Iran negotiations. If a deal materializes, expect oil to drop fast. If talks break down, $120 oil is realistic. Third, financials. The financial sector had a quiet but constructive week. With the Fed holding rates and the yield curve stable, banks remain in decent shape. The bigger story is the divided Fed, which creates some uncertainty for net interest margins going forward. Watch the regional banks closely if rate cut expectations continue to fade. The 10-year Treasury yield is sitting at 4.39%, which is a key level to watch. Fourth, consumer discretionary. Mixed. Royal Caribbean and other cruise stocks had a strong week. Retail showed some weakness given high gas prices, with California pump prices hitting $6 per gallon. As long as oil stays elevated, consumer discretionary stocks face a real headwind heading into summer. Fifth, healthcare. Eli Lilly was a standout this week, jumping 7% after blowing past first-quarter estimates and raising its full-year sales outlook to between $82 and $85 billion. The GLP-1 weight loss drug story remains one of the most powerful in the market. United Health was a notable loser today, down a fraction of a percent and continuing its recent struggles. Sixth, industrials. Caterpillar's massive Thursday rally tells you something important. Despite all the macro concerns, real economic activity, especially construction and infrastructure spending tied to the AI build-out, is humming along. Industrials are quietly one of the best performing sectors of 2026. Seventh, gold and precious metals. Gold is sitting around $4,600 per ounce, still well below its January peak of $5,600. The Reuters poll of analysts this week raised the median 2026 gold forecast to $4,916, a signal that professional money still sees upside. If the Iran situation calms, gold may stay pressured short term. If it escalates again, gold catches a bid fast. Now, let's talk about next week because there is a lot to watch. First, the Apple earnings reaction will continue to drive sentiment Monday and Tuesday. Watch for analyst price target upgrades. The stock needs to hold above $278 to confirm the breakout to new all-time highs. Second, the Iran peace talks are the single most important wildcard for the market. Any breaking news, positive or negative, will drive oil prices and risk assets immediately. Third, we have a lighter earnings week ahead, but several names matter. AMD reports on Tuesday, Disney reports on Wednesday, Pfizer reports Tuesday morning. These will give us another read on AI spending, consumer health, and pharma trends. Fourth, the economic data calendar includes ISM services on Monday, Jolty's job openings on Tuesday, and most importantly, the April jobs report this coming Friday. A hot jobs number could push back rate cut expectations even further. A weak number could trigger a sharp move in bonds and stocks. Fifth, watch the Federal Reserve speakers. Multiple Fed members are scheduled to speak in the wake of the divided 8-4 vote. The market will hang on every word for clues about the future path of rates. Now, for our top picks heading into next week, remember, do your own research. These are the names we are watching, not personal recommendations. Stock pick number 1, Alphabet. After its monster earnings beat and the cloud business growing 63%, Alphabet has clear momentum. Watch for any pullback as a potential entry. Stock pick number 2, Apple. The earnings beat and improved guidance set up a potential breakout to new all-time highs. The $278 to $280 level is the key support to hold. Stock pick number 3, Caterpillar. The Thursday move was huge, and as a global economic bellwether, this name continues to ride the AI infrastructure build-out. Stock pick number 4, Eli Lilly. The GLP-1 story is not slowing down. The raised guidance and continued earnings momentum make this a high-conviction long-term name. Stock pick number 5, the energy sector via XLE. If you want exposure to oil without picking individual names, The Energy Select Sector SPDR Fund gives you broad exposure during a period when energy prices are likely to stay volatile. Names to be cautious on next week: Meta after the JP Morgan downgrade and AI spending concerns, Roblox after today's 17% crash, and any leverage inverse ETFs given the broader market trending higher. Let me wrap this up. This week was historic. Record highs on Monday, OpenAI shock on Tuesday, the most divided Fed vote since 1992 on Wednesday, Caterpillar boom and Meta crash on Thursday, and a stunning Friday recovery driven by Apple and Iran peace progress. The bottom line is that despite all the chaos, markets ended the week at fresh all-time highs. The bull market is still intact, but the path forward depends heavily on three things: AI spending discipline, the Iran situation, and the Fed's evolving policy stance. So if you found value in this video, please do me a favor and hit that like button. It genuinely helps the channel. If you are not subscribed yet, smash that subscribe button and hit the notification bell so you do not miss our Monday stock picks video where we go deeper on the names we just covered, our Wednesday market pulse short for the midweek check-in, and our market spotlight deep dives. Drop a comment below and let me know what you are watching for next week. I read and respond to every comment. As always, do your own research, protect your capital, and we will see you Monday morning with our top stock picks for the week ahead. Take care.